Welcome back to the Quantreef channel. ETH sitting right around 1870, parked almost exactly on session VWAP, and that's exactly the kind of coiled spot worth slowing down on. Today we'll walk through liquidity, support and resistance, VWAP, Fibonacci, the fair value gaps still open on the chart, positioning between retail and the bigger players, and where price is most likely headed over the next several hours. Let's get into the chart. Price is at 1870.57, wedged between 4-hour resistance up at 1873 to 1879 and support down at 1855 to 1847. Structure strength here reads low and stop hunt risk reads high, which tells you this is a range, not a trend, with wicks likely on both edges. Trend and structure scoring leans mildly bullish, but relative strength against the wider market is soft, so momentum right now is closer to neutral than anything decisive. Session VWAP sits at 1870, basically right under current price, so ETH is trading at fair value rather than showing acceptance either direction yet. The anchored VWAP from the recent swing low comes in at 1856.38, and the one from the swing high sits up at 1880.79. Price is sandwiched between both, which is exactly why traders watch these lines. A close above the high anchor would flag real buying acceptance, a close below the low anchor would flag the opposite. The nearest big pull sits just overhead at 1887.60, under 1% away, and it's the strongest wall on the board with a high chance of getting tagged inside the next day. The downside pull is out at 1801.20, nearly 4% below, roughly similar in size but far less likely to get touched soon. That imbalance in distance is why price often drifts toward the close pull first. Stops resting just above 1887 are the easier magnet, and only after that gets swept does the market usually decide which way it actually wants to go. Resistance stacks at 1873 and 1879 on the 4-hour, support sits at 1855 and 1847. Given price is already pressing into the upper zone, resistance is the more likely test first, with stops probably clustered just above 1879. A clean break and hold below 1847 would invalidate any bullish read here and open the door toward the lower liquidity pool instead. Above price, there's a daily bear gap from 1875 to 1894, already about half filled, and it's got a high revisit tendency, so it's acting like a real magnet right now. There's a smaller 4-hour bear gap just above that, completely untouched, also with a strong pull. Below, the 4-hour bull gap from 1849 to 1875 is half mitigated with a very high revisit rate near 93%, meaning if price dips, that zone tends to get revisited before anything else. Swing runs from 1820.58 up to 1936.72. And price is sitting inside that range, close to the 0.618 level near 1865. It's hovering just above that fib, using it almost like a floor for now, with the 0.5 level at 1878.65 overhead acting as the next hurdle. Extensions up at 1968 and beyond only come into play if price actually clears the current range with conviction. Volume and liquidity scores strong at 78. Institutional positioning reads bullish near 70, and behavioral sentiment is up near 72, all constructive. But relative strength and rotation against the broader market is weak, under 40, and Fibonacci location plus macro regime both sit close to neutral around 45 and 50. So you've got participation and positioning leaning long, but rotation and location dragging the other way, which is exactly why the overall grade lands neutral with an executable intraday setup rather than a clean directional call. Retail is heavily long here, over 70%, and the bigger accounts aren't far behind at 65% long. But look at the last 4 hours of actual flow. Short volume is slightly outweighing long volume, meaning fresh money has been leaning short even while standing positioning stays long. That mismatch matters. If support gives way, it's the crowded long side that gets squeezed first, likely accelerating any move down toward that lower liquidity pool. Given the reach odds favor the upside pool at 1887.60 far more than the downside one at 1801.20 over the next day, the more probable path is a push into that wall first, sweeping resting stops, before any real decision gets made. If sellers step in there, look for a rotation back down through the 1855 support into that bull fair value gap, with further downside potential toward the mid-1840s and beyond. If buyers instead hold above 1887 with real acceptance, the bear gap up near 1893 to 1899 becomes the next draw. One thing worth repeating, since this is an altcoin, ETH takes a lot of its short-term direction from Bitcoin, so this whole liquidity picture can get overridden fast by a Bitcoin sweep. Check Bitcoin's own levels before leaning on this read either way. The bullish case needs price holding the 1855 to 1847 support and then actually accepting above 1887, invalidated on a clean break under 1847. The bearish case is built around rejection at that 1887 wall or the 0.5 fib, confirmed by a rollover back through 1873, invalidated only if price pushes and holds well above 1936. Either way, this is about structure and confirmation, not a signal to act on blindly. Risk gets framed off those invalidation points, not off a hunch. So ETH sits right at a decision point, and whichever side takes the next liquidity pool first probably sets the tone for the next rail move. If this kind of breakdown helps, drop a like and subscribe so you catch the next one. Quantreef runs this same 9-layer structure, probability and liquidity read across more than 100 coins, and you can try it free for 7 days at quantreef.com. As always, this is for educational purposes only and isn't financial advice.